Our question for you is how you go about attempting to forecast the degree of future success of one specific product in a good business versus another, such that you invest in American Express and Coca-Cola rather than Diners Club or RC Cola, for example. Thanks.
Well, with American Express, it was an interesting situation because Diners Club got there first. I think American Express, in a certain sense, I mean, they did it for a lot of reasons, but they went into the credit card business because they were worried about what was going to happen to traveler's checks. And although traveler's checks are still exist in a significant way, but the interesting thing when American Express went into competition with Diners Club and with Carte Blanche, as I remember, that was also existed at the time, was that instead of charging less than Diners Club and going in figuring they were going against an established guy and they'd come in at a lower price, they went in at a higher price, as I remember. And the American Express Centurion was on that card. I've got one that I got in 1964, but they were in it before that. It had more value in time. I mean, it got better representation. And frankly, if you were a salesperson out with somebody and you could pull out that American Express card with that Centurion, you look like it were J.P. Morgan. And if you pull out the Diners Club, it had a whole bunch of flashy signals. You look like a guy that was kiting his checks from one month to the next. And a fellow named Ralph Schneider and Al Bloomingdale developed the Diners Club, and they were very smart about getting there first, but they weren't smart about how they merchandised it subsequently. RC Cola, you know, it did. There are all kinds of colas that came after Coke. I mean, you know, you go back to 1886 and come up with something at Jacob's Pharmacy that's incredibly successful. You know, fairly soon you're going to get lots of imitators, but Coke really is the real thing. And you know, you offer me RC Cola and say I'll give it to you at half the price of Coca-Cola in terms of drinking it. I mean, this is a product that's 6.5 ounces, sold for a nickel in 1900. You know, and now if you buy it on the weekend and buy it in large quantities and everything, you're not paying that much more. This newspaper was 3 cents in 1942. You know, the amount of enjoyment per real, in terms of the real of what you pay for this, has gone dramatically down in inflation-adjusted money. So it is a bargain product. You know, you have to look at See's Candy. You know, if you live in California and you were a teenage boy and you went to your girlfriend's house and you gave the box of candy to her or mother or father and she kissed you, you know, you lose price sensitivity at that point. That's yeah. So we really want products where people feel like kissing you, you know, rather than slapping you. It's an interesting thing. I mean, you know, in effect, we're betting on the ecosystem of Apple products, but led by the iPhone. And I see characteristics in that make me think that it's extraordinary. But I may be wrong. And you know, so far, I would say we've been right on American Express and Coca-Cola. American Express had this huge salad oil scandal in 1960, happened in 63, November, right around the time Kennedy was shot. And there was really worry about what the company would survive, but nobody quit using the card. Nobody quit using the traveler's checks. And they charged a premium price for their traveler's checks. So there are things you can see around consumer products that sometimes can give you a pretty good insight into the future, and then sometimes we make mistakes. Charlie?
I got nothing to add, except that if we'd been offered a chance to go into Coca-Cola right after it was invented, we probably would have said
We
no.
return to them. Yeah.
It would have looked kind of silly to us.
Well, unless we drank it. Now, Charlie, listen. No, he's right. I mean, we don't foresee things that we haven't got a lot of evidence in on. I mean,
No.
we want to see a lot of. If we're talking about a consumer product, we want to see how a consumer product behaves under a lot of different circumstances, and then we want to use something. Actually, there was a book by Phil Fisher written around 1960 called Common Stocks and Uncommon Profits. It's one of the great books on investing, and it talks about the scuttlebutt method of investing, which was quite a ways from what Ben Graham taught me in terms of figures, but it's a very, very good book, and you can learn a lot, just by going out and using some shoe leather. Now they call them channel checks now or something like that, but it's you can get a feel for some products, and then there are others you can't, and then sometimes you're wrong, but it is a good technique. It's an important investing technique, I would say that, and Ted and Todd do a lot of that, and they have some people that help them out on doing it too. Charlie's done it with Costco. I mean, he is. I mean, all the time he is finding new virtues in Costco. And he's right, incidentally. I mean, Costco has an enormous appeal to its constituency. They surprise and delight their customers, and there is nothing like that in business. You have delighted customers, you're a long way home.
You always say you didn't go into too much detail to obtain an understanding on cryptocurrencies. So what factors caused you to say that it's a bubble?
Well, generally non-productive remain. If you had bought gold at the time of Christ, and you figure the compound rate on it, it may be a couple tenths of 1%. It essentially is not going to deliver anything other than supposed scarcity, because you can only mine so many. But so what? I mean, what does it produce itself? The check is a wonderful idea. Just imagine how the world would be without being able to write checks or have wire transfer of funds. But it doesn't make the check intrinsically itself worth a lot of money. And if you said you can't use something called check with a little piece of paper, you'd do something else to transfer money. I think that anytime you buy a non-productive asset, you are counting on somebody else later on to buy a non-productive asset because they think they can sell it to somebody for more money. And it's been tried with tulips, and it's been tried with various things over time, and it does come to a bad ending. I mean, you have a hard time. You can think of raw land. I mean, the Louisiana Purchase was, say, $15 million for 800,000 or so square miles of land. In fact, you're sitting on land that came with the Louisiana Purchase, and so what we paid $20 a square mile, and 640 acres in a square mile, and you're down to 3 cents or something. So that was a pretty good purchase of what was then a non-productive property. But it depends. But it's very hard. You can buy stamps. Bill Gross collected a wonderful stamp collection, and it sold for more money in the end. But it's dependent on somebody else wanting to buy, hoping they will sell it for more money, and so on. And in the end, you make your money out of productive assets. If you buy a farm, you estimate what the crops, what amount per acre of soybeans or corn or whatever may be raised, and how much you have to pay the farmer that farms it for you, and what your taxes will be, and various things. And you make a conclusion based on what the asset itself will produce over time. And that's an investment. When you buy something because you're hoping tomorrow morning you're going to wake up, and the price will be higher, you need more people coming into it than are leaving. And and you can get that, and it will feed on itself for a while, and sometimes for a long while, and sometimes to extraordinary numbers. But they come to bad endings, and cryptocurrencies will come to bad endings. And along with the fact that there's nothing being produced in the way of value from the asset, that you also have the problem that it draws in a lot of charlatans and that sort of thing who are trying to create various sorts of exchanges or whatever it may be. It's something where people who are of less than stellar character see an opportunity to clip people who are trying to get rich because their neighbor's getting rich buying this stuff that neither one of them understands. It will come to a bad ending. Charlie?
Well, I like cryptocurrencies a lot less than you do. And so, to me, it's just dementia. And I think the people who are professional traders that go into trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out.
To the extent that we're being webcast around the world, I hope some of our stuff doesn't translate very well, actually. The problem has been about 1,300 daily newspapers in the United States. There were 1,700 not that long ago. Is that no one except the Wall Street Journal, the New York Times, and now probably the Washington Post has come up with a digital product that really, in any really significant way, will replace the revenue that is being lost as print newspapers lose both circulation and advertising. And if you look at the communities in which we operate, or the communities in which, you name it, other newspapers operate, the community could be prospering. We're in a prosperous economy presently, and all are losing daily circulation. They're losing Sunday circulation. They're using what's called street sales. They're losing home delivered, and I've been surprised that the rate of decline has not moderated in the last 5 years. We bought all the papers at reasonable prices, so it is not a great economic consequence to Berkshire. But I would like to see daily newspapers actually, be economically viable because of the importance to society. But I would say that the trends, which I put those circulation figures in there because I think shareholders entitled to look year to year at what is happening, and it's happening to 1,300 newspapers throughout the United States, and it happens in small towns where you would think that the alternative sources of information would not be that good. It happens every place, and the Journal, the Times, and probably the Post have a viable economic model in the digital world, and probably will continue to shrink. I'm almost certain will continue to shrink in the print world, but the digital world will be big enough that, and they'll be successful enough so that they have, in my view, a sustainable business model. But it is very difficult to see, with the lack of success in terms of important dollars arising from digital, it's difficult to see how the print product survives over time, and I'm afraid that's true of 1,300 papers in this country, and we'll keep looking to see if there is a way to do it, but you'd have to look at our experience and look at the experience of everyone else's. McClatchy newspapers came out the other day, And I think the newspaper, which is very good, fine cities that they operate in, and advertising revenues down something like 17 or 18% in circulation. But it isn't just them; it's everybody in the business. And I wish I had a better answer for you, but I don't. I would say that the economic significance to Berkshire is almost negligible, but the significance to the society, I think, actually is enormous. And I hope that we find something. I hope others find something, because we'll copy it. But so far, we have not succeeded in that. Charlie?
Well, the decline was faster than we thought it was going to be. So it was not our finest bit of economic prediction. And I think it's even worse. I think to the extent we miscalculated, we may have done it because we both love newspapers and have considered them so important in our country. These little local newspaper monopolies tended to be owned by people who behaved well and tended to control the politicians. And we're going to miss these newspapers if they disappear. We're going to miss them terribly. And
I think
I
you
hope
meant
to God it doesn't happen, but the figures are not good, Warren.
No, they aren't. And it isn't just, it isn't some town that has a particular problem with unemployment or anything of the sort. And it isn't due to general economic conditions. It's due to the fact that in this paper, if you wanted to know the baseball results from the present day and the box scores and everything else, they told you the following morning, and it was still news to you. And the financial material that I read from there, in terms of looking at the stock prices and everything, they were news to you the following morning. And what was developing in the Pacific in terms of the war was news to you when you read about it in the morning in the New York Times. And news is what you don't know that you want to know. And those help wanted ads, segregated as they may have been, still were the place to go to look to find a job. And you can go up and down the line, and one element after another, where the daily print newspaper was primary, they're no longer primary.